Hi everyone, welcome back to another exclusive podcast from IronFX, where we are dedicated to bringing you the absolute best education to help you take your trading to the next level. Today, we are diving into the remarkable phenomenon of gold reaching all-time highs. Let's explore the reasons behind this surge and whether it's sustainable. I'm your host, Ketan Ramachandra. At the beginning of the second quarter of this year, gold captured headlines by reaching unprecedented price levels as spot prices hit $2,431 per ounce, marking a significant milestone in its history on the 12th of April. This surge in gold prices sparked curiosity and speculation among investors worldwide. However, this precious metal pulled back in the subsequent weeks, dropping 6.3% to $2,277 per ounce. But it staged another strong rally to surpass the original all-time high as spot prices briefly raced past $2,450 per ounce on the 20th of May, sparking yet another frenzy among investors and speculators. So why did gold prices rise strongly in 2024? Several factors have contributed to this remarkable uptrend. Firstly, economic uncertainties and geopolitical tensions have driven investors to seek safe haven assets like gold, which is traditionally viewed as a store of value during times of crisis. Secondly, the prospect of potential interest rate cuts by the Federal Reserve as inflationary pressures appear to be dissipating steadily while economic activity in the US looks to be slowing have caused demand for the dollar to wane, thus functioning as another bullish catalyst for gold. Now, I'm sure many of you will be familiar with the fact that the US dollar and gold share a negative correlation. For those who may not be aware of this relationship, it simply means that when the value of the dollar rises, gold prices usually fall, and vice versa. And finally, fiscal stimulus measures implemented by central banks and governments to stimulate their respective economies have fueled concerns about persistent inflation and currency devaluation, further boosting demand for gold as a necessary hedge. However, the key question on everyone's mind is whether this run up in gold prices is sustainable. While gold's rally may have been fueled by temporary factors such as geopolitical tensions and inflation fears, its long term sustainability depends on various factors, including the trajectory of global economic output, central bank policies, and market sentiment. Additionally, the interplay between supply and demand dynamics, as well as developments in alternative investments such as cryptocurrencies, could also have some influence on gold prices in the long run. In conclusion, gold's ascent to all time highs in 2024 reflects a confluence of economic, geopolitical, and monetary factors. While the surge in gold prices may have been driven by temporary uncertainties, its sustainability hinges on a complex interplay of global economic forces and market dynamics. As investors navigate this unprecedented environment, it is essential to stay informed, remain vigilant, and adapt to evolving market conditions. That wraps up today's episode of Gold Making All Time Highs. We've explored the remarkable rise of gold to all time highs and pondered its sustainability in the face of evolving economic and geopolitical dynamics. Join us next time for more insightful discussions on finance and the global economy. In the meantime, do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.